Lines 27A and 27B are used in special circumstances where the court finds a need to deviate from the statute. Surprise you by ignoring or erasing your entry if you put it on the wrong line. It surprises me that I can't ever recall receiving an inquiry about it. For example, if you checked the shared parenting checkbox on page 1 and attempted to make an entry on line 27A, your adjustment would be ignored. Likewise, if you check one of the two sole residential boxes on page 1, you would be prohibited from making an entry on line 27B. Now I'll flip back to page 1 to let you see the checkboxes I'm talking about. If you click the checkmark button on the toolbar, the button that's to the immediate left of the main window button, you would be alerted to that problem. Another thing to remark about line 27 is that deviations can be positive or negative. You can tell that from the language of line 28, which says to enter the amount from line 20C plus or minus any amounts on lines 27A or B. So if the adjustment is a negative one, you must enter the number by preceding it with a minus sign, which is the hyphen on your keyboard, or the minus sign on your numeric key. Now, if the mechanics of line 27A are rather simple, line 27B is the opposite. While the statute gives you a few factors to consider when making a line 27B deviation, like the time the children spend with each parent, a parent's ability to maintain housing for the children, and each party's expenses, it doesn't give any additional explanation or formula on how the deviation amount should actually be arrived at. So Roxy gives you some choices. In the first, you simply enter an adjustment that you yourself arrived at. In the second, you can choose from a set of known methods, which we'll go over in a moment. Because deviations are treated subjectively on a case-by-case basis, our first checkbox can be used to simply enter the adjustment like you might do on line 27A. You check the first checkbox in the gray area, enter an adjustment, positive or negative, and that's the number that appears on line 27B. When I entered now I don't want to clutter up the gray box while we continue discussing it, so I shift-tabbed back to that field and backspaced out the number and then unchecked the box. The remaining checkboxes for line 27 represent a few known deviation methods based on case law, common practice, or simple logic. The attraction of these methods is that they give some starting points for thinking about a deviation, and if both parties accept the algorithm, it produces a deviation amount that is not bitterly contested. This is probably the best example of a line where it's not only helpful but necessary to consult the associated help topic. You'll find that the help topic for line 27B is something like 20 double-spaced typewritten pages in length. There's information about the mathematics behind each checkbox, as well as summaries of all the related available case law, from Supreme Court cases to unreported appellate court cases. I may have returned to the worksheet screen prematurely because it's worth mentioning that you can print out any help topic by using the print button in the help window. The second set of checkboxes is engaged by checking the checkbox labeled Use one of the adjustment algorithms below. It works like this. You check the Use one of the adjustment algorithms below checkbox, then you check one of the next three checkboxes to specify your method. The first is for offsetting the annual obligation of the obligor with the annual obligation of the obligee. As the help topic explains, if you check this first checkbox, essentially it nets the values on line 22. So if the obligor has a line 22 value of 5,000 and the obligee has a value of 4,000, the obligee's 4,000 obligation would be subtracted from the obligor's $5,000 by entering it as a negative $4,000 deviation on line 27B. By the way, Pauley is a 1997 case cited as 80 Ohio State 3rd at page 386, and Hubin is a 2001 case cited as 92 Ohio State 3rd at page 240. Now, I'm not going to discuss each of the dozen or so cases we cite in the help topic, but I will give $83 per month. About 3 months after the divorce, the obligee mother filed a motion to increase child support, which was granted in the amount of $376 per month. The appellant father objected on the basis that he was entitled to a mandatory automatic credit for the time the children spent with him pursuant to out of Franklin County. Hubin was certified to the Ohio Supreme Court under constitutional provisions that permit appellate court judges to certify conflicts for review and final determination. The question thus certified was this: when determining the proper amount of child support in a shared parenting case, must a court presume that each parent must pay his or her support obligation on line 24 of the child support worksheet and then order the difference through an offset while reserving the ability to deviate? Hubin answered the question no by affirming the decision of the lower court which rejected the offset formula. Even after Hubin, there are decisions that attempt to distinguish it and use offsetting formulas. We refer to some or most of them in our help topic. Once you acquaint yourself with the Pauley and Hubin cases, and knowing that all three of these appellate court cases I referred to predate Hubin, I can't recall which, but I think it was Pauley that said it best by pointing out that offsetting is what's done in the split parental worksheet. If the legislators wanted to use offsetting in the shared parenting orders, they would have expressly done so, perhaps by combining the shared parenting orders with the split parental worksheet, but they didn't. Instead, they coupled shared parenting arrangements with the sole residential worksheet, and therefore they must not have intended to offset obligations in these circumstances. At this point, I'd like to skip the second checkbox and talk about the third checkbox in this gray box. It's all about the percentage of time the children spend with the obligor parent. It's an adjustment based on the obligor's time of possession and the obligor's annual obligation. You enter a percentage like 25%, and the obligor receives a 25% discount or credit in the child support obligation. It seems to make sense at first blush, and if that's the way your court does it, use this third checkbox to accomplish that. The appellate court case of Kopus versus Kopus, cited in the help file, mentions in the concurring opinion that it did not think it was proper to apply the percentage of time of possession against the combined annual obligation. Remember, though, that this is a concurring opinion and not the majority opinion of the court. If you think that's a good reason for handling the deviation in that manner, this is the checkbox for you. With that introduction, the second checkbox is better understood. Years ago, I'll guess in the mid-90s, I received a call from a judge or magistrate who asked that I consider a hypothetical situation where mother and father were identical insofar as income and adjustments were concerned. Furthermore, this pair of equals agreed to a shared parenting arrangement wherein each parent would spend 50% of the time with the child. The answer was, what should the support be? The knee-jerk answer is that there shouldn't be any exchange of money. On its face, it would seem not in the best interest of the child to upset what is arguably an ideally equitable arrangement. Most who hear this hypothetical are in agreement with that. However, the results of the third checkbox are called into question because if you gave the obligor a 50% reduction in their obligation, a payment would still be required. An example of that would be if the annual obligation was $10,000, it would only be reduced to $5,000 by checking the third checkbox. To cure this seemingly illogical result, the second checkbox applies the percentage against the combined annual obligation. So the difference mathematically is that the third checkbox multiplies the percentage of time of possession by the obligor's annual obligation. That's the number on line 23C called the actual annual obligation. When no health insurance is provided, it's the actual annual obligation on line 26C. By contrast, the second checkbox takes the percentage and multiplies it by assuming equal income and equal adjustments. The combined annual obligation would be $20,000 if 50% dad's obligation is $10,000. Therefore, 50% of $20,000 is $10,000, and that $10,000 deviation reduces dad's $10,000 obligation to zero. You can see that based on the amount of the combined annual obligation, the difference between using the second or third checkbox is substantial. There are pros and cons to each of these checkboxes, but they are there if for no other reason than to be checked or unchecked to see what number they produce as a starting point for arriving at the agreed to amount. One last point to mention is that some courts will use one of these checkboxes but reduce the visitation by the percentage that is represented by the court's standard visitation order. An example would be if the parents entered into a shared parenting arrangement whereby the obligor would enjoy visitation with the child or children 35% of the time. If the standard visitation order for the court gave 20% visitation, the obligor would only be entitled to a 15% reduction of their obligation, without getting into the issue of what line they're applying the percentage against. I'm not sure which counties do this or if there are any counties that still do this, but making a reduction in the percentage in that manner flies in the face of the 50-50 hypothetical, and that's only important, of course, if you accept the 50-50 hypothetical. The last checkbox in line 27B's gray box is never used by itself. It qualifies the action of the three preceding checkboxes, and therefore it should only be checked when one of those three checkboxes is also checked. It came about because some people argued that it was not proper to apply an offset against adjustments. I'm not sure of the rationale. I guess it's because the adjustments are considered actual out-of-pocket expenses as opposed to line 17, which is a statistically generated amount. Mathematically, it works like this. If you have the first checkbox checked, checking the fourth checkbox causes Roxy to take the amount on line 22 and add it to the amount on line 23B instead of the amount on line 18. If you have the second checkbox checked, checking the fourth checkbox takes the total of lines 17 and 21A and B, depending on who the obligor is, and from that sum, it subtracts any amount on line 21C or D, again, depending on who the obligor is, and it multiplies that amount by the percentage of time of possession. Finally, if you have the third checkbox checked, checking the fourth one takes the sum of lines 18 and line 21AB. From that sum, it subtracts any adjustment on line 21CD and multiplies the result by the percentage of time of possession. It seems to me there are pretty decent reasons not to check this box, because even though line 17 is not an actual out-of-pocket expense, it represents one. That amount is supposed to be equal to the cost of housing, food, and clothing, and everything else, all out-of-pocket expenses. Again, the program is designed to let you choose a deviation and not to choose one for you. It's difficult to understand what's happening mathematically when someone recites a jumble of numbers, so I've prepared this screen that gives you something visual to lock onto. It details the operation of the four checkboxes in the Use This Algorithm section of line 27's gray box. Now, when the first checkbox, the offset checkbox, is checked, Roxy simply takes the obligee's line 8. You should note that unlike the next two checkboxes, this one isn't related to time of possession. And I didn't mention it when I was going over the Pauley case earlier, but even though the Pauley appellant was demanding offsetting based on time of possession, the Pauley opinion seems to speak in broader terms, that is, offsetting as is done in the split parenting worksheet, unrelated to time of possession issues. Now, the second checkbox, the 50-50 hypothetical checkbox, takes the percentage time you get from the child support table. That product is converted to a negative number and is then used as the line 27B adjustment. In the third checkbox, the Copus versus Copus checkbox works like the second checkbox, the difference being that the percentage is applied to the obligor's annual obligation. When the fourth checkbox is checked, what you're doing is you're directing Roxy to act on the adjusted annual obligation instead of the line 17 or line 18 amounts, which are the annual obligations before being adjusted. So when the fourth checkbox is checked together with the first checkbox, the obligee's adjusted annual obligation, the line 22 amount, is added to line 23B and is used as the line 27B adjustment. Likewise, when the fourth checkbox is checked together with the second checkbox, the obligor's line 17 amount is adjusted by any amounts on line 21 before being multiplied by the percentage time of possession. And finally, when the fourth checkbox is checked along with the third checkbox, the obligor's line 18 amount is adjusted by any amounts on line 21 before being applied to the percentage time of possession. Now, that concludes the section on deviation, and that brings us to the last